Sarabjit Kour of Angel Broking is joining us on these numbers. Sarabjit, what did you make of the Q4 performance, but more importantly the guidance of 9.9 to 14.3% rise in net income?
Lata, hi. I actually don't track Cognizant, but you pointed out it's met most of the, in terms of parameters, it met most of the numbers, and coming from a higher base, 21% by-on-wide growth is definitely commendable. And coming into next year, yeah, it's a very significant fall from 21 to, and that to the range, I think is pretty significant, 10 to around 14%. And given that companies predominantly financial and healthcare, I think probably they sense something, I think volatility in the financial markets probably. The reason why probably they have given such kind of a guidance. So I guess that will be interesting to understand what's gone behind it. But clearly one indication is clear that next year looks a bit sober for IT companies, going by what NASSCOM has also said and what Cognizant is also giving, which is the highest growth grossing company in IT. So I guess it's a bit cautious time in terms of growth for IT, but I need to, I'm very curious to hear the reasons behind that, because the range is pretty wide, and given that they are focused more on healthcare and financials, I think it will be more interesting to know what's going on.
We are just coming to starts off with Q1 itself. The company is one of the few companies left which actually gives you a quarterly guidance now, and their Q1 guidance is 3.18 billion to 3.24 billion, and in Q4 they ended with 3.23 billion, which means at the upper end, your best case according to the company's guidance is that it's going to be a flat quarter. At the lower end, you're actually going to see a degrowth. 3.18 to 3.24 is Q1 guidance, which compares with 3.23 that they saw in Q4. So they're clearly seeing some headwinds straight away in the first quarter, which is why even if you go at the middle of the company's guided band for Q1, it's going to be a quarter of contraction QOQ.
Fair point. Prakash Diwan is also joining us. Prakash, if you heard the numbers, not much of a complaint with the Q4 number itself, or for the full year calendar of 2015, where they have managed a 21% rise in revenues, but the guidance for 2016 is 9.9 to 14.3%. As well, the guidance for first quarter is $3.24 billion against a performance of 3.23 actual this year. Flat guidance for Q1. Your thoughts?
Yeah, so, we've always seen how critical the Cognizant guidance ends up becoming willy-nilly to kind of, steer the expectations from our companies, from the listed space. So this time around, if they're taking this tack of softening the stand for the subsequent quarter, and mind you, their financial year end is December, so naturally, they would have worked towards improving a otherwise weak quarter. And if Feb, March is a weak quarter, I think it's an anticipation of a couple of things. One is a weak dollar itself, which they probably envisage. And secondly, most of the well-entrenched companies are also not likely to see pricing power this time around. Because if you want to retain clients, pricing is getting to be very critical. It's not possible to, up prices. You're not able to maintain prices, as we've seen in a couple of commentaries from HCL and all. So this is going to be a tough quarter for the large players, and I think Cognizant is getting cognizant on that. So that's very clear. And my sense is we will also see the same tepid reaction happen to TCS and HCL Tech. Maybe a Wipro or Infosys might be on a slightly different trajectory for their own reasons, but otherwise the overall market the industry could steer in the same direction.
So you could see brokerages putting out notes tomorrow, bringing down their EPS forecasts?
I would believe, especially for the larger ones, it would happen. Especially TCS is struggling. There have been quite a lot of murmurs about downgrades being sharp there. So I would believe so. Yes, that would happen. And Cognizant has always been, a very major frontline player that sets the tone, given its scale, and also it's not possible that others kind of have a very different trajectory when they are anticipating closer to the lower band of the guided this thing, revenue forecast. So it
actually,
will
with 21% growth, they actually outperform most of the Indian majors. Rima, any more? Anything else you picked up from the press release?
Yes, at 21% growth, it's significantly better than the rest of the industry. Just to remind you, the NASSCOM's guidance for the current year that we're in was about 10.3% in dollar terms. Compared to that, NASSCOM has done 21%. And even if you compare to a constant currency term, since it derives, it's pricing itself in dollars. But even then, the industry's forecast for this year would be about 12.3% thereabouts. So NASSCOM continues to outperform by a huge margin. Which brings you the question is that are the industry estimates for the next year much higher than what we currently think they are today? Because if NASSCOM is to continue with its outperformance streak and maybe at best case, grow at 14%, then the industry perhaps is going to be in for a slower ride. So that's one question. With respect to more data, their CY16 EPS growth is seen at about 8 to 12%. So that's just
that is in line with the
that's just another number to work with. That's the EPS growth. And considering the top line growth is at 10 to 14% and EPS growth is slightly lower, maybe I'm guessing they're penciling in a little bit of a margin contraction. So that's the only point.
No reasons given in the press release.
No, there is there's a conference call which we'll have to wait for later.
Okay. Well, Sarabjit, would you expect some bit of selling in IT stocks tomorrow?
Lata, depends upon the kind of, as I said, need to hear given the pessimism and optimism given in the guidance, I need to see where the company probably is balancing or why such divergence in view given that both are there, because 14% growth is not bad actually if they've managed to happen. So I would like to get into details of the thought process behind the guidance and then probably take a call from there.
Fair point. Prakash, Sarabjit and Rima, thank you very much for joining us. So the post-market news that has come from Cognizant is that no problem with the fourth quarter numbers, but every single problem with the guidance for 2016. It's 50% lower than the actual growth reported for 2015, which stood at 21% in terms of revenue growth, and the expectation at best is 14.4% for the current year, that is 2016. That might have a telling effect on IT stocks tomorrow.
That said, we had one estimate in Nomura. They said that we expect the next year's guidance to be 12%. So I'm not too sure how off it is compared to market expectations.
Okay, well, that may be a salve, but we have to wait and see what the conference call says. So if that is indeed the case, that certainly puts at least some kind of a downside support for the IT companies tomorrow. On that note, let's take a break. We'll come back with more that happened today. We will also discuss with a global expert what this market volatility in European markets spells for us tomorrow.